Hi, everyone. Welcome back to Local Living. I am your host, Liz Jones, and here on Local Living, we dive into the real estate trends, your community highlights, and all things local in the Inland Valley. Today, we're going to be digging into Q2 of 2025 housing market and take a deep dive and look at the big picture. Are we finally entering into a more balanced housing market? So let's get into it.
Welcome to Local Living Tri-City, your go-to podcast for exploring the vibrant communities of Temecula, Murrieta, and Menifee. Join me, Liz Jones, as we dive into real estate insights and local business stories, bringing you closer to the heart of our Tri-City area. Let's get started with today's episode.
Let's take a look nationally what we're looking at. Over the last 6 months, the U.S. housing market has really undergone a lot of changes. It's shaped by the economic policy factors and obviously inflationary methods too. So let's pull up a couple of highlights. So there has been a huge inventory surge amid all of the states and our housing markets, and a big slowdown in demand. So as of April 2025, the home inventory increased, get this, 30.6% year over year. So that means 36% higher than last year in number of houses on the market. That's significant, 1/3. It's marking the 18th consecutive month of growth. That's giving buyers a lot more options to choose from. And here's the thing, they are still not fully engaging. Okay, so pre-pandemic, everybody was all in. And since that time, our buyers' demand has been slowing. So what are the contributing factors? So our home price growth is slowing also. So we have nationally, prices overall grew at 1.3% year over year from April, and the median sales price for across the nation is sitting right at $437,000. It's still high overall when you're thinking about across the nation. That may sound different here in the Inland Valley, but for nationwide, that is actually pretty high. The market is cooling, however. So our mortgage rates are one of those factors. It's still a drag on the market. The average 30-year fixed right now, as of April anyway, was 6.7%. And that's slightly lower than what it was in 24, the same time last year, but it's still enough to dampen the affordability range. And it's certainly making a factor on those people that are refinancing. They're trading at 2% for a 6 or 7%, not happening. And those people that are doing move-ups or move-downs for that matter. So a move-up buy is where you have a smaller house, you're ready to move to the next house, or you want to buy a second house and rent the first house. Those are move-up buys. And a move-down buy is when you're actually in a big house, family's gone, they're all moved away. You've got this tremendous house with this tremendous cost to maintain it, so you're moving down into something smaller. Clearly, you have this house almost paid off, or little or no mortgage, and then you have to take on a $600,000 or $700,000 house that's smaller. It kind of causes some pause. Anyway, so buyer activity is down overall. Mortgage applications have been measured, and they are down almost 40% compared to the same period in 2019. Affordability, inflation concerns, job uncertainty, that's been a first in a long time, continue to play a major role in this. In 2023, we saw the fewest home sales in nearly 30 years. So 2023, the fewest home sales in 30 years. In 24, prices kept climbing and rates stayed really, really high. Now here we are in 25. Our inventory is finally growing, but affordability is out of touch, and that's the real elephant in the room here. So add to the rising home insurance premiums, cost of maintenance. A lot of these homes in this area, face it, they're 20, 30, sometimes 40 years old. It's time for all of their systems to be replaced, the roof to be replaced, the HVAC systems to be replaced, the pool to be resurfaced. These are things that are contributing that if your home is not in tip-top shape, or even if it is, but still at the end of its life, it is contributing to a slowdown of buyer engagement. Here in the Inland Valley, let's talk local. So Murrieta, Temecula, Winchester, Menifee, Wildomar. Here's the facts. The inventory has still climbed in these areas. In Murrieta, it's gone up by 18%. Temecula is 25% up. Menifee, get this, man, Menifee is taking off. 38% climb in inventory in Menifee. Wildomar, Little Wildomar is up 10%, almost 11%. And Winchester, a whopping 21%. Now, I think these cities, and I see Murrieta has some growth areas. Wildomar is limited in space. Winchester has lots of room to grow. A lot of new builds are going on out there. Temecula doesn't have that new area of expansion, but there's some turnover there, 25%. Buyers at this moment, more homes available means that you have more room for negotiation. I'm seeing that across the board. I'm watching my clients ask get-go, right off the get-go, can we go down $25,000? Now, is it obtainable? We're almost at that point. We can definitely see negotiations happening. And buyers, this is your time, and I know you've been very patient for the last 12 years as it's been a climbing market. But I would say you can be aggressive, but not to the point of insulting. At this point, you're still going to have some major pushback. And sellers with a 2%, 3% mortgage loan, they're just going to sit on this and let it slow down. All right, what's happening with pricing? So our local prices have been still trending upward, and that is actually pretty surprising when I think about it, but it's a modest incline. So Temecula is up about 5.8%. The average price in Temecula right now is $782,000. In Murrieta, we're seeing a 2.2% increase, where the average home price is $685,000. Look at that. There's almost $100,000 difference between living in Temecula and living in Murrieta. Just saying. Menifee, up 3.9%. You can buy a great house in Menifee. That average house is $580,000. That's $200,000 off from Temecula to Menifee. So affordability, think Menifee. Winchester, 2.4%. The average price of a home out there is $605,000. Let me tell you, that might be the best kept secret. Yes, you've got to drive to the freeway. You've got a 10-minute drive west to the freeway. But look at the money you've saved. You saved about $150,000, and much of Winchester does have Temecula schools. So if you've got a family that's growing affordability, you still have to head to San Diego, consider Winchester a great option for you. Let's look at sales to list ratio. So this is your sales. You listed it at one price, you sold it at another price. What does that look like? So most local homes are selling at or below asking price. So you list it for $670,000, you're probably selling it within $5,000 to $8,000, just a 1% movement. And that's in Temecula, Murrieta, and Menifee. All about a 1% ratio down from the asking price. Nationally, however, it's still around 1%. So when you go to bargain 4% off, keep that in mind that most are still selling at 1%. Only 28.4% of homes nationwide are going above asking. So if you're in a key market like LA, San Diego, you are competing. You are competing. It's a tough gig out there. There's not enough inventory to give you some space, but that is something that you're doing. And how long are homes staying on market? Let's talk local for a minute. We have Temecula. They're averaging about 14 days when priced correctly. If they are not priced correctly, they are sitting. We're seeing it across the board. Anytime you have a luxury property, you can expand that. If you have a luxury property, you're looking at 90 days in Temecula to get it done. If you're looking at $1 million tract home, you are sitting on the market. If it's not priced competitively, you're sitting on the market 20 to 30 days. Murrieta is looking at 20 days for the same home, so a little bit longer than Temecula. And Menifee is taking an average of 27 days to get into escrow. Many of our sellers are making their first price reduction around 3 to 4 weeks. So they're setting the price, they're pausing for 3 to 4 weeks, and they're making an average $10,000, $15,000 of price reduction if they haven't received strong offers. A lot of times as a property is listed, you'll have an offer that comes in here. You're not really comfortable with it, so you sit at that price. You'd be interested to find out a lot of times they're coming back to that price for their first price reduction. It seems to iron out. Today's buyers expect in the market, especially at a $900,000 range. And when you think about it, it's in Temecula, that's above the average home. That's priced in, that's Red Hawk, most homes in Red Hawk, Morgan Hill. Those are the kind of homes that are pricing in this $900,000. What are buyers expecting in that home? First of all, they're expecting the kitchen to be upgraded and modern. They want all the bathrooms to be updated. They're looking for smart home features in that home. They're looking for efficient and not at the end of their life, HVAC, solar, etc. They are looking for fresh, neutral colors, updated flooring. They don't want your carpet. Professional staging and photos. Homes near top-rated schools, shopping, hiking trails, convenience. So they are looking, in short, they're not looking just for the house, they're looking for a lifestyle, okay? So keep that in mind. Here's an interesting fact. The average first-time home buyer in California is now 38 years old. Oh my gosh, my family was like, they're like 10, 11 years old. That's the time when most people are able to buy their first house here in California, when they're approaching 40 years old. And that is up from 29 nationally. In the 1980s, you could buy a first home at 29. Now it's 38, so 10 years later. In urban areas like San Francisco, 28% of the buyers are under the age of 35. Economic pressure is shifting the ownership later in life. That's a tough one for first-time home buyers. Let's shift gears a little bit. There's been a lot of talk about Rocket Mortgage acquiring Redfin. What does that mean to you? What does that look like to you? Well, it is a $1.75 billion deal, and it could reshape a lot of the industry. Let me talk a little bit about the benefits, and then we can also talk about some of the concerns. Okay, so obviously, Rocket Mortgage, easy to apply for a mortgage. Redfin, fairly easy the way they had it structured. So it creates a one-stop home search to closing. So upload your data for a pre-approval, search their website, find a home, help yourself into the home, make an offer online. It provides that potential to do it all in one shot. That could save people like sellers up to $20,000 on a transaction. And here's the gig. They have poured so much money into advanced personalization and AI. Their integration is huge. So there's a potential for a really game-changing software. The biggest concerns is there's going to be less competition. They're going to own the market, pretty much. They can call the shots. And as we saw with the early developers of technology, we had Zillow was an early adapter of technology. And for agents to be introduced to buyers through their program many years ago, let's go back 10 years, it was a very affordable option. And then they started to own their market share. And then it became a very costly factor to agents. So upward of 35% of a transaction would be given to Zillow. So dominance sometimes starts off really great, but then it's a little scary as we go into them owning their market share. They can ask anything. So the competition is healthy. There's privacy worries with large-scale data integration. So Rocket Mortgage knows everything about you. They know how much you make. They know where you work. They know your social security number. They know everything about you, right? And now this data is compiled in one source. So privacy issues. And interesting enough, it looks like regulators and lawmakers are reviewing this to make sure that it's good for everybody out there. So what does it mean for you? Redfin is not going away. At least it's not going away by name, but it is evolving. Expect fewer in-house agents and more emphasis on referrals and tech tools. Now, the previous model of Redfin was almost like a corporate structure where you would dial in, you would reach one person, you would be assigned if you're a listing, your property going on the market, you would be assigned to a local listing agent. She would be your main point of contact, and then you would deal with corporate US to get everything done. If you were going to a property, you would identify a property, you would plug in a code, you'd go see the property, and you'd be assigned to a buyer's agent. It's almost like an Uber dial up. They would send somebody your way, and then you'd find a different person the next time. So they hired these people, they were on salary, and it operated like that. Well, that system may very well be going away. So now there's going to be new strategies. They're probably going to emphasize on referrals to other agents. So in other words, there will be partners with Redfin in the field, like myself. We would be a partner in Redfin. They would introduce us to you, and they would charge us a fee to be working with you, and they will end up getting, you would get an agent one-to-one for that. And then obviously the platform, the media platform, we would share information back and forth. Okay, here's the reality of it. This is a new strategy. So buyers, if you are financially ready, it's a great time to explore. You've got some choices, you've got high inventory, you might have some leverage with buying a house, you could be more selective, and you have less pressure right now to purchase, to move quickly. If you're a seller, this is important, guys. It's time to be strategic. So we have seen a lot of price reductions. We've tried the market. If your house is not in stellar condition and you're asking a stellar price, it is sitting. And eventually you'll be offered a price that doesn't feel comfortable. And sometimes if you don't accept that price or you don't accept the range of pricing, you may be sitting, you may expire, and you may find yourself owning that house a little bit longer. Sellers need to be strategic. Price your home competitively. Let's look at the market. Let's look at the houses around. Let's look at the condition of the houses that you're competing with. And it's time to prep it well. Maybe we look at a home inspection prior to putting your house on the market. Maybe we look at all the systems that aren't working or where they are so that we're not surprised. There's nothing that hurts a seller more is when he's surprised that he has a pool leak, or he's surprised that this irrigation system is not working, or that the HVAC is at the end of the life. There's surprises. Why not be prepared for it? Why not slow it down enough to take this process in, learn what's in the house, maybe get it fixed, clean things up, maybe even a fresh, new paint. It's a great time to be more strategic with your property. We need to prep it well and be open to concessions. There's not that many buyers. So if there's not that many engaged buyers and they're being selective and you need to sell your house, it's time to be open to what they're asking. It's not a feeding frenzy. Okay, let's be clear. We're not there yet, but it is something of concern. So final thoughts. Second quarter 2025, the market is showing signs of a balance. Okay, not too hot, not too cold. And if you are thinking of buying or selling or investing, now's the time to start strategizing. That's it for today. If you're wondering how the market affects your buying or your selling, please reach out. We help buyers find great deals for the sellers to maximize their value, and we strategize with our heart. Until next time, I'm Liz Jones, helping you live local and think long term. Don't forget to subscribe, share, like, follow us on social media, and for more market updates and community spotlights. Thanks. Until the next time.
Thank you for listening to Local Living Tri-City. Stay tuned for more insights and stories from Temecula, Murrieta, Menifee, and surrounding areas. Be sure to subscribe, leave a review, and share this episode with a friend that is passionate about the Tri-City area as you are. Goodbye for now, and we'll see you next episode.